Welcome to Nexusfeed, your go-to source for deep insights into global politics, business, and technology. If you want to stay ahead of the curve and understand the forces shaping our world, make sure to subscribe and turn on notifications so you never miss an update. And if you enjoy thought-provoking discussions, hit that like button and drop your take in the comments section. With that said, let's dive into the video. President Trump has unleashed a torrent of tariffs, targeting imports from nearly every corner of the globe. This aggressive move is part of his administration's broader strategy to renegotiate trade deals and protect American industries. The tariffs are designed to penalize countries that, according to Trump, have taken advantage of the United States for decades. These tariffs are not mere sprinkles, we're talking a full-blown economic hurricane. The impact is expected to be far-reaching, affecting not just the targeted countries but also American consumers and businesses. The cost of imported goods is likely to rise, leading to higher prices for everyday items. The minimum tariff is a stiff 10%, but it escalates quickly. For some countries, the tariffs are even more severe, creating a complex web of economic repercussions. Businesses that rely on imported materials are scrambling to find alternatives or absorb the increased costs. The European Union faces a 20% levy, which has already sparked outrage among EU leaders. They argue that these tariffs are unfair and could lead to a tit-for-tat escalation, harming global trade relations. While Japanese goods are hit with a 24% tariff, Japan, a key ally of the United States, is now reconsidering its trade policies and alliances. The Japanese government has expressed its disappointment and is exploring ways to mitigate the impact on its economy. China bears the brunt of Trump's protectionist fury, slapped with a whopping 54% tariff. This move is seen as a direct challenge to China's growing economic influence. The Chinese government has vowed to retaliate, raising fears of a prolonged trade war between the world's two largest economies. This unprecedented move has sent shockwaves through the global economy, with the U.S. stock market taking the first and most brutal hit. Financial analysts are warning that the volatility could continue for months, if not years, as markets adjust to the new trade landscape. Investors are running for cover, fearing a full-blown trade war. The uncertainty is causing a flight to safety, with many moving their investments to less risky assets like bonds and gold. The ripple effects are being felt across various sectors, from technology to agriculture. The Dow Jones Industrial Average, a bellwether for American industry, plummeted over 1,500 points, a drop of 3.6%. This significant decline is a clear indicator of investor anxiety and the potential long-term impact of these tariffs on the economy. The S&P 500, a broader measure of the market, plunged over 4%, entering correction territory. This downturn is a stark reminder of the interconnectedness of global markets and the far-reaching consequences of protectionist policies. The Nasdaq Composite, heavily weighted towards technology companies, wasn't spared either, falling nearly 5%. The speed and ferocity of the market reaction underscore the depth of investor fear. Trump's tariffs have injected a potent dose of uncertainty into the global economy, and uncertainty is kryptonite to the stock market. This isn't just another market dip, it's a full-blown panic. The Dow Jones is teetering on the edge of correction territory, down nearly 10% from its recent peak. The S&P 500, which entered correction territory today, is down more than 11% from its February high. The Nasdaq Composite has also taken a beating, down over 16% from its recent peak. The pain isn't confined to U.S. borders. Global markets are reeling from Trump's protectionist punch. The Nikkei, Japan's benchmark index, tumbled 2.8%. South Korea's Kospi index also took a hit, falling 1.1%. European markets joined the global sell-off, with banks and technology stocks leading the decline. The interconnected nature of the global economy means that when America sneezes, the rest of the world catches a cold. Trump's tariffs are a nasty virus infecting markets from Tokyo to London. The fear is palpable and the consequences could be dire. The currency markets are also on a wild ride. The US dollar, usually a safe haven in times of turmoil, has taken a beating. The US dollar index, which measures the greenback against a basket of major currencies, tumbled 2.2%. Meanwhile, the Japanese yen and the euro are surging against the dollar. The yen strengthened 2.5% against the dollar, reaching its strongest level in months. The euro rose nearly 2% against the dollar. These currency fluctuations reflect the deep uncertainty gripping the global economy. Investors are fleeing the dollar, fearing that Trump's trade war will weaken the U.S. economy. The yen and the euro, seen as safe havens, are benefiting from the flight to safety. Section 5. Corporate casualties. The corporate world is also feeling the pain. Companies with global supply chains and significant international exposure are particularly vulnerable. Apple, the tech behemoth, saw its shares fall nearly 5% in after-hours trading, adding to its 9% decline during regular trading hours. Nike, the athletic apparel giant, tumbled 6% during the day, with other multinational consumer stocks also suffering significant losses. Amazon, the e-commerce titan, wasn't spared either, with its shares dropping 7%. Even U.S. Steel, which should theoretically benefit from tariffs on foreign steel, saw its stock price fall. The market's message is clear: nobody wins in a trade war. Section 6. Economic warning signs. The economic outlook is darkening by the day. With each passing moment, new data and reports paint a more concerning picture of the future. The clouds of uncertainty are gathering, and the signs are becoming harder to ignore. The ISM Services Index, a key gauge of the U.S. service sector, fell to 50.8 in March, indicating slower growth and declining hiring intentions. This drop suggests that businesses are becoming more cautious, potentially scaling back on expansion plans and new hires. While jobless claims fell unexpectedly last week, this could be a temporary blip. The labor market remains fragile, and any positive news should be taken with a grain of caution. The underlying issues, such as underemployment and stagnant wages, continue to persist. UBS, the Swiss banking giant, predicts that inflation could surge to nearly 5% if Trump's tariffs remain in place. This potential spike in inflation would not only affect the cost of goods, but also have a ripple effect across various sectors of the economy. This would erode consumer purchasing power and further dampen economic growth. As prices rise, consumers may find themselves cutting back on non-essential purchases, leading to a slowdown in retail and other service industries. UBS also warns that U.S. real GDP growth could be slashed by 1.5 to 2 percentage points in 2025 if the tariffs persist. This reduction in growth would have far-reaching consequences, affecting everything from job creation to government revenues. This would be a significant blow to the U.S. economy, potentially pushing it towards recession. The sight of empty retail stores and abandoned shopping malls could become more common, reflecting the broader economic malaise. The risks are real and the stakes are high. Policymakers, businesses, and consumers alike must stay vigilant and prepared for the challenges ahead. The decisions made today will shape the economic landscape of tomorrow. Section 7. Trump's gamble. President Trump argues that his tariffs are necessary to protect American jobs and reduce the trade deficit. He claims that other countries have been taking advantage of the U.S. for too long, engaging in unfair trade practices. However, many economists argue that tariffs are a blunt instrument that will ultimately harm the U.S. economy. They point out that tariffs will raise prices for consumers, increase costs for businesses, and disrupt global supply chains. Moreover, they argue that tariffs are unlikely to achieve their stated goals of bringing back manufacturing jobs or reducing the trade deficit. Instead, they could trigger a global trade war with devastating consequences for the global economy. Section 8. Echoes of past mistakes. History is littered with examples of protectionist policies backfiring. These policies, often implemented with the intention of protecting domestic industries and jobs, have frequently led to unintended and often disastrous consequences. The Smoot-Hawley Tariff Act of 1930, which raised tariffs on over 20,000 imported goods, is widely blamed for exacerbating the Great Depression. This act, intended to shield American businesses from foreign competition, instead led to a severe contraction in international trade. Instead of protecting American jobs, the tariffs triggered a wave of retaliatory measures from other countries, leading to a collapse in global trade. Ports that were once bustling with activity became eerily quiet, and the ripple effects were felt across the globe. Larry Summers, former U.S. Treasury Secretary, has warned that Trump's tariffs could have similar consequences. He draws parallels between the protectionist measures of the past and those being implemented today, cautioning that history could very well repeat itself. He argues that they will lead to higher prices, reduced output, and strained international relations. The interconnected nature of today's global economy means that the impact of such tariffs could be even more pronounced than in the past. Sam Stovall, chief investment strategist at CFRA Research, predicts that the S&P 500 could fall further into correction territory due to the tariffs. He emphasizes that investor confidence is fragile, and the specter of protectionism looms large over the markets. The ghosts of Smoot-Hawley are haunting the markets, and investors are right to be worried. As history has shown, protectionist policies can lead to economic downturns, and the echoes of past mistakes serve as a stark reminder of the potential consequences. Section 9. The road ahead. The road ahead is fraught with uncertainty. The immediate impact of Trump's tariffs is clear: a stock market sell-off, currency fluctuations, and heightened economic anxiety. The long-term consequences are less clear, but potentially far more severe. If Trump continues down this path, he risks triggering a global trade war that could plunge the world into recession. The stakes are incredibly high. Will Trump blink and reverse course, or will he double down on his protectionist instincts? The answer to that question will determine the fate of the global economy for years to come. That's it for today's Nexusfeed presentation. If you found this video insightful, don't forget to smash that like button. It really helps us to bring you more in-depth analysis. Got thoughts on this topic? Drop them in the comments. We love hearing your perspective. And if you're passionate about staying ahead in global politics, business, and technology, hit that subscribe button and turn on notifications so you never miss a beat. Thanks for watching Nexusfeed. We'll see you in the next one.